Good morning, good afternoon, good evening. It's your boy, Gary Scott, aka the Solid Pip Assassin. And today, man, I just got a pretty dope video for y'all. It's pretty much just the overview of how I look at the market, um, and what I put in place to be able to attack the market. All right. Um, the way I trade, you'll be able to trade any pair. Um, but the things I do want to share with you guys is that I am a swing slash intraday trader or intraday slash swing trader, however you want to put it, right? But the things that I use is basically what the market gives me. I don't try to make it any more difficult than it could be or that it should be. I simply just find the simplest way to explain everything and to put everything into perspective so that way you can attack the market. All right, again, guys, I am no financial guru. Anything that I will show you in this video um, will work majority of the time. It won't work all the time. Nothing is fully guaranteed. I can't guarantee you everything will work like that, but I will try to put every scenario in this video. All right, guys. Don't don't forget you have to remain patient when you're trading. All right. Another thing is don't make anything harder than it should be. All right. I said it before and I'm gonna say it again. All right. The more you simplify things, the easier it'll be for you. All right. Another thing that I also want to say is um it's gonna take a lot of repetition. It's just not gonna be instant, but you're just gonna have to be repetitive with everything that you're doing. All right, very repetitive. Um, the more repetitive you are, the more you'll see things, the more it'll stand out to you. Um, and you'll be able to get continuous growth. All right. The things that I use when I trade. All right. First thing is price action. Second thing is supply and demand. Third thing is structure. All right. AKA support and resistance. All right. And the last thing that I do use that's definitely one of the most important things because it makes up the market is candlesticks. All right. Candlesticks make up the market. Without the candlesticks, there's no market. So if anyone tells you that candlesticks aren't important, they're telling you wrong. All right. Candlesticks are extremely important. It gives you an idea where the price could head based on the particular candles that appear at levels. All right. Um, so without further ado, let me start this video, man. I feel that this is going to be very important. This is going to be a very important video. I'm gonna try to put every scenario in so that way it'll be realistic. It isn't just fluff. So without further ado, guys, let me get started. Again, shout out my academy, G Figures Academy. I am the educator there. All right, guys. So if you are interested in learning a little bit more, getting a little bit in depth, I do one-on-ones. Um, and I will also do group sessions, but I preferably like to do one-on-one so that way I can reach on a more intimate and more strategic level with you guys. So that way I can find out what works best for you. All right. But again, last time, without further ado, let's get into the video. All right. So right now, I am looking at silver. All right. Silver is a metal. It's not necessarily a, let's just say, Forex pair. All right. It's not a major or minor. It's a metal. All right. Um, I simply love this particular pair. All right. This is my favorite pair. A lot of people trade gold. A lot of people trade everything else, but a lot of people miss out on silver. And silver is a very clean, it's a very clean pair to trade. Um, so when I'm looking at this, like first thing I try to look at, let's just say we start from scratch. We're here. All right. Let's just say this isn't even on a chart yet, right? The market moves in threes. All right. Again, the market moves in threes. All right. You have an uptrend with higher lows and higher highs. All right. You have a downtrend with higher highs and lower lows. I mean, with lower highs and lower lows. All right. And then you have a sideways moving market, which people like to call a consolidation range, where it's moving sideways. All right. No true direction on where it wants to go. All right. So when looking at this, guys, again, the market moves in threes, moves in an uptrend, it moves in a downtrend, and it moves in a sideways moving market. All right. That's key to number one. That's very important to understand. All right. Again, uptrend, downtrend, sideways moving market. All right. When looking at this, what do you guys feel like the market is in? If you said downtrend, you are correct. All right. The market is moving in a downtrend. Why? Because it created a high, price broke a higher low. All right. And price continued to make lower highs from that point. Lower highs, lower lows. Right? Lower highs, lower lows. All right. So the price moved in a downtrend. So when you see price moving in a downtrend, which direction do you want to trade? You want to trade down. All right. You don't want to go against the grain. You go against the grain, bad things can happen. All right. When you go with the grain, you're moving in swift motion. All right. Good things happen. All right. So in this particular market, right, the structure is showing that price wants to move to the downside. All right. Price makes continuous lower highs and lower lows. Now, when we're looking at this downtrend, all right, the first thing that you want to pay very close attention to is what's going on over here. All right. What's going over here? Is price respecting these higher lows? It most definitely is, because if we, excuse me, if we put on, right, this line right here, right, we see that this created a higher low. Boom. Did price ever go past that higher low again? No, it didn't. All right. Price never went past that higher low again. All right. So when price came back to this point and decided to go back up, we wanted price to attack what? A higher high, or respect this higher high to then break. All right. But in this case, price continued its higher low, all right, from its uptrend. All right. Price came here, went past this higher high. All right. And what happened when price went past this higher high? At that point, what did it do? All right. It broke this higher low. Right. Price broke that higher low, right, with the wicks, and then it also broke it with the candles. All right. Candles closed below that higher low point. It also closed below this higher low point. So initially, what it's basically telling you, right? What's it telling you? It's telling you that price broke a higher low, right? And in most cases, not all the time, but in most cases, if price breaks a major higher low on a 4-hour time frame, then price is aiming to shoot lower. All right. So now, when price breaks these two higher lows, which is like double confirmation that price wants to head lower, from that point, what you do is you simply just wait for price to retest. And what happens here? Price retest. All right. Price never went back above what? This higher high. All right. Price never went back above that higher high. Never again. All right. Until later months pass. All right. So what happens? All right. Price breaks this higher low. It creates a lower high, right? Because what happens? It respects these wicks. So with it respecting the wicks are important. All right. If it respects those wicks and it's unable to break those wicks, right? That's your higher low. I mean, your lower high, right? That's your your lower high. All right. It then creates a lower low. So when we're moving in a downtrend, the aiming point is the lower low. All right. Once it creates that lower high, once it hits a certain point in the market, right, what happens? You want to aim at that particular point. All right. Now, here's the key. When price retests, remember, I want you guys to write this down. When price retests, It's going to go to one or three areas. It's going to go back to a structure point. It's going to go back to in this case, a supply zone because it's selling, right? Or it's going to go retest to a liquidity area. Those are the three, right? The three: structure, supply and demand, but in this case, supply because structure is showing that it wants to sell. All right, and then liquidity. Those are the 3 points that it's going to go to when it retests, just so it can go take out a lower low. All right. So when price breaks these higher highs, it creates a lower low because then price retests. All right. When price retests, it reached a particular level in the market here. All right. It reached a particular level in the market. In most cases, right? Supply and demand. In this case, it came and reached a supply zone. All right. Price came and reached the supply zone. This is the last up candle before the down move. All right. You pretty much box those two in. All right. The last up candle and the down candle before it broke structure. This is the last up candle before it broke structure. This is the last up candle before it broke structure. All right. So that's a key level in the market. Both of these two candles, the last buying candle and the last selling candle next to that last buying candle. Those are the two important candles that you want to box off and drag across. All right. So now what happened? Price broke. Price came and retested that level and dropped again, right? Because this is a break. It's a break of structure. All right. Price retested back where? It retested back to this supply zone once, twice, but even 3 times here. All right, was showing you that price is respecting that level, all right, of that supply. All right. So now, when price respects the supply, what is the aiming point? What do we want to know where we could potentially enter in this market? All right. Let's just say you missed this one. All right. You missed this sale to the downside, but you have to know that price is going to retest. When price breaks structure, it's going to retest eventually. All right. So in this case, boom, price retest, price came here, right? And then here's the thing, price engulfed off of the supply zone. It gave you a buying candle here and a strong selling candle to the downside that pretty much takes away this whole entire candle. This whole entire buy candle here takes it away. So if you want to be aggressive, all right, in this case, you most definitely can enter here. All right. I wouldn't even say being aggressive because this is the second time price came to this level. All right. So initially, where's our entry point? All right. We want to go to the downside. Our entry point is after this candle close. So let's just say, all right, let's just say that price, right? Let's just say that price, let's just say this happened at 4 p.m. Or let's say it happened at 8 a.m. in the morning for people that trade New York session, right? Let's just say this happened in the morning at 8 a.m. This candle closed, right? Let's just say this candle closed at 8 a.m. That's your entry point. All right. Notice when you're trading on this time frame, you might get drawdown, and it's okay. All you have to do is stay patient from that point. All right. This is your entry. Boom. You enter right after that candle closes. Your SL is above this zone. All right. Your SL is above that zone. So as long as your SL is above that zone, you're good. Because now we know if price breaks this, we know that potentially price could potentially head higher and take out this higher high. All right. And that's, of course, too far for our SL to be. All right. We still want to maintain our money, whether we lose or win. We want to maintain a level of equity in the market. All right. So, boom, you enter, price goes into drawdown. Okay. But it's respecting this level. All right. Boom. So, where's our aiming point? Our aiming point is the lower low. Right? Our aiming point is the lower low. In most cases, it's the lower low. Sometimes it will be a demand zone. All right. But our main target point is the lower low. when we're going into a downtrend. We want to aim at that lower low. All right. So boom, what happens? Price hits its target, and then boom, you made your money. Money is made, you're done. All right. You're done for however long it takes for that trade to hit. All right. And it looks like it takes a while, but that's okay. You swing it, your money's made, you enter the trade, you don't have to look at it for a while, just let it run. All right. Boom. So what happens? Price hit the TP. All right. When price breaks this lower low, right? Remember, when it breaks a lower low, it has to do what? It has to retest. So let's take that away, right? Boom. We see that price breaks that lower low. That's our target. Within now, when price retests, what are the levels that it can go to? Right? Where could it go to? Remember, supply and demand, in this case, supply, structure, right? Or liquidity. In this case, when it retests, right? Where you retest to? It retests to another, right? It retests to another supply zone. And yes, this is a supply zone, right? So you have price retest, price respects this high here, all right? Gives you 1, 2 candles, and this last candle, right? We do notice on this candle here, it's larger than this white buying candle. This selling candle is larger than this buying candle. All right, it's larger. So now what happens? Price comes here and closes below, and it closes below that supply zone significantly enough that you most definitely can enter at that point. All right. So boom, you enter here, right? Again, your SL wants to be above that supply zone. That's all you want, is it to be above that supply zone. All right. And our aiming point is what? Our aiming point is that lower low that it created when it retests. All right. And again, what happens? Price hits your target. You still have a good risk to reward ratio, and price is heading to the downside. Now, again, right? Last example, and then I'll move to an uptrend example. When price breaks a lower low, in this case, what are the areas that it can retest? Again, supply, because we're in a downtrend, right? Structure and liquidity. Those are the 3 levels that price will retest to. All right. So, boom, price breaks, drops, but it creates when it retests, because this is a retest. All right. This is the new low. When price retests, that's the new low. All right. But again, when price retests, where is it going to go? It's going to go to a liquidity area. All right. Or a structured area, or in this case, supply zone. All right. So now, when price retests, when I say liquidity, this is what I mean. All right. There are liquidity within candlestick structure. There is liquidity within candlesticks. There's liquidity within candlesticks. I'm going to say that one more time. There is liquidity inside of candlesticks when they are created. All right. In this case, right, when I say liquidity, some people may call them fair value gaps, and that's okay. Nothing's wrong with that. Right. But this is a liquidity area within, right, within this particular within this particular move. All right. And what I'm going to do, right, you see the space between the bottom of this wick and the top of this wick. You see the space within that candlestick, right? You see that? Right? You see that? Boom. That is a liquidity area that price had to come back to continue to go lower. All right. And the reason you want to pay close attention to that, let me spread out just a little bit more. Right? Why didn't it come back up here? Why didn't it come back up here? Or why didn't it come back to this structure level? All right. Why? Because one, liquidity within this is being covered. Liquidity is being covered all throughout this, right? Wicks are covering up liquidity within candlesticks, right? Because this wick is long enough to take away this liquidity in this candle. This wick is long enough to take the liquidity in this candle, so on and so forth. All right. Liquidity is covered. So in this particular instance, liquidity wasn't covered, right? Price closed above a little bit and then gives you a strong engulfing candle to the downside here. So what happens? What do you want to do? You initially will want to enter after this engulfing candlestick because that's something that I like to call price action. And it's also candlestick confirmation. Remember, I told you price action, candlestick confirmation, right, are the things that you want to pay close attention to because what candlesticks is what makes up the market. All right. So now what do I do? All right, boo. I see this bullish candle close above, but I seen another bearish candle close and engulf this bullish candle, which shows you that price action is heading to the downside. So initially what you want to do is you want to put your SL above this fair value gap or liquidity zone, whatever you want to call it. You want to put it above, right? And you want to aim for what? That low after the retest, right? You want to aim for that retest area from where it started. What do you have? A good risk to reward ratio. Money is made and you can go about your day, right? I said that would be the last one, but I do want to show you one more. All right. Because I showed you two supplies when price retest, and I showed you a liquidity, but now I want to show you how price will retest to structure. All right. In this case, price broke this lower low. All right. And it was struggling at the structure level. All right. I'm going to mark off the structure level. Boom. From wick to body, that is a structure level that price was respecting. So what I'm going to do is I'm going to take this off. All right, and I'm going to make it the structure box, and I'm going to keep it from extending all the way over. And we're just initially just going to look here. All right. What happens? Price is having a hard time. Once it breaks structure, it broke structure here and created that lower low. Price broke strongly, which shows you that price does want to continue to go lower. But what's happening? Remember, I told you price has to retest structure, supply, in this case, because it's selling, it's in a downtrend, and liquidity zones. I showed you two examples of supply zones, and I showed you one example of supply. I mean, one example of liquidity, and then I also showed you now structure. All right. When price breaks, it's wicking out once, twice, 3 times, 4 times, 5, 6 times. It wicked that area 6 times, and it failed to break above. And because it failed to break above, right, you can enter it multitude of different ways just by looking at this. All right. If me personally, right, if I was to enter this trade, right, I will enter it really after this candle closes, right? This particular candle right here, right? Because not once did it reject. Once did it reject, twice it reject, 3 times, 4 times. It rejected that area 4 times. The main thing that you want to look at, if it rejects an area 3 times, but if it rejects it 4, that's a very significant area that it's respecting. So initially, I would want to enter here after that doji candlestick, right? A lot of people say doji is indecision, right? But sometimes doji is a good thing. A doji candle is a good thing, right? When I say doji candle, it's a candle that has a very small body, but it has wicks that's longer than the body of the candle. So those are doji candlesticks. Engulfing candlesticks are candles that engulf the previous candle of a different color, right? So boom. What do I have? I enter here. I'm in drawdown just a little bit here, right? Initially, what do we want to aim for? Right? We want to aim for that lower low that was created. Boom. We aim for the lower low. Remember, our SL is above structure, liquidity, or supply and demand area. It's above that. So regardless of the fact, initially what happens is you still got a great risk reward ratio here, right? What happens? Price is messing around in the structure zone, and then boom, it falls. All right. Money is made, you go about your day. All right, boom. So I gave you guys 4, but really 3 examples on how to trade a downtrend, right? With all the things that I showed you. Structure, this is structure, right? This is the lower low, structure. I showed you liquidity. And I also showed you supply and demand 2 times, here and here. All right. That's what I showed you guys. That's the downtrend. Now, what I'm going to do is I'm going to show you, right? I'm going to show you an uptrend now. All right. We just went over the downtrend. Now I'm going to show you an uptrend example. All right. So now we're going to go here. All right. We're going to go a little bit further back to find examples, of an uptrend. All right. If we're looking at this guy, perfect example. All right. Good example. If we're looking at this, is the market moving up or is the market moving down? If you said the market moving up, you're correct. If you say the market is moving in an uptrend, you're correct, right? How do we know when to attack an uptrend? How do we know? All right, this is how you figure it out. All right, price is moving downward. All right, this is a small structure of downtrend, very small. All right, but the thing that you want to pay very close attention to is when you figure out if it's going in an uptrend, if price creates a lower high, right? A lower high here, a lower low here, right? And when price breaks that lower low, all right, initially, what's it doing? It definitely wants to go back up, right? Because when price breaks lower lows, it's when we retest initially, right? But when we figure out that it's moving in the uptrend is when it breaks, right? When it breaks this structure of the lower high, we have an idea that what price wants to do, what price wants to go up now, right? When it breaks that lower high, price wants to go up. And in this case, it did break that lower high, right? It broke that lower high, right? Went straight above it, right? Gave you a very small retest area here. Where'd that retest go? It went to the last down candle, right? Before it broke structure. This is the last down candle. Although it's a doji candlestick, that's still considered a supply and demand area, right? So boom, right? If you're not confident with this one, as you say, supply and demand, right? Boom. You put the supply and demand up. What is it doing? It's respecting it. But not only that, guys, if price, let's just say price doesn't stop here. Let's just say price comes here. There is liquidity here also, but there is a what? This is the last down candle before the up move, right? You see how I do that? This is the last down candle before the up move, right? Initially, right? But there's inside of this supply zone, this demand zone, I'm sorry, because now we're in an uptrend, it's demand. When price retest areas is going to retest structure, liquidity, and demands now because we're in an uptrend, all right? It could come here. Our pricing really come here. So let's just say we get rid of this, right? Because when you do want to look for supply zones, you want to look for the last, demand zones, really want to look for the last selling candle before it broke structure, and vice versa. When it's in a downtrend, you want to look for the last buying candle before it broke structure. All right. In this case, this is the last down candle. This doji black candle here is the last down candle before it broke structure. Price retest that area, right? Once broke structure completely, came back and revisited one more time, right? One more time, and then what happens? Goes up. But here, right, we notice that this is what? This is a structure level. Wicks are very important, guys. Anybody tells you different, they're lying to you. All right. Structure. All right. This is the last wick before price went back down. All right. So that's a structure level. Don't get confused. All right. Price broke. Price came back down to retest. Right. The same supply, the same demand zone before it did what? it bought. And remember, when price breaks a lower high and it retests, it's going to take out a what now? It's going to take out a higher high. Instead of a lower low, now it's going to take out a higher high. All right. So when price broke this higher high and created another higher high, and when price retest, right? When price broke created this higher high, we come back down here. All right. We see that what? Price is respecting this level. All right. And it gives you a strong engulfing candlestick, right? This is a strong bullish candlestick that it engulfed. All right. So boom. This will initially be your entry, guy. All right, boom. Price retest. Your entry point is there. All right. Your SL is below now your supply. All right. Your SL is below that supply. That demand. I'm sorry. It's below that demand. And what are we aiming for? We're aiming for the higher high. Again, you have a great risk to reward ratio. Boom, price hits it. It creates another higher high. Price retest. Again, when it retests, it's going to come back to where? Structure level, liquidity level, our demand level, because we're in an uptrend now. And what happened? When price retests, right? When price retests, this is the last down candle before price broke structure. Price never revisited this area, but again, it revisited a liquidity area. Remember, this is a very small wick, right? And this is a very small wick. These two candles leaves a gap in price. So if I grab this GAN box here and take it from the wick to the other wick, what happens? Price is respecting that liquidity zone, right? Price closed back above it. Price sold, but closed back above. All right, and what happens? From that point on, whenever you get another candle, you can either enter off of this candle or you can enter off another bullish candle that closes above that liquidity zone. All right, so initially I would want to enter here. Right, my SL from that point would be right there. It'll be right below the liquidity area, the liquidity zone. And what am I aiming for? I'm aiming for the higher high. Aiming for the higher high. TP gets hit, money is made, great risk reward ratio. Right, great risk reward ratio. Money is made, you're done. All right. So I showed you how price breaks the lower high. I showed you an example here when you could have entered the market. All right. And it came back to a demand. I also showed you another example on an uptrend, how it come back to liquidity. All right. Now what I'm going to show you is how price can come back to a structure level. All right. Boom. So what happens? Price break structure. Again, this is your structure level. All right, what happens? Price break structure, boom. Initially, what do you want to do? You want to find points of interest or points of entry, I should say. Price break structure, right? It gives you a strong bullish engulfing candle here. All right, now here's the thing, guys. This is great that I'm able to show you this. All right, so when looking at this, you have no area to aim at, right? So what you do is you go back to the past, right? You go back to the past and you aim for those highs. Okay? You either aim for this particular high or you aim for a high over here. Or you can aim for a supply zone over here, right? Initially, what you want to do is you want to aim for a high. You can aim for a supply zone. That's fine because it's the last down candle before price broke structure over here. But you definitely could aim for those structure levels in the past. All right, when you have nothing to aim for, you aim for structure levels in the past. All right, so boom, price hits. We definitely could go up a little bit higher because if you go back to the past, this is a high. All right, if we drag a wick, the line all the way across. All right, drag it a little bit more. All right, that's a high that we can aim for. And as you see, what happens? Price targets that high, literally to the T. All right, price hits it. You enter the market here. That's a strong enough candle to enter there, right? Boom, you take off. Price hits the TP again. You are in a drawdown just a little bit here. All right, but it's respecting this structure level, and we want to put it right, like right a little bit below that structure level. All right, because if price breaks back below the structure, it's more than likely going to fall down a little bit lower before it may hit higher. All right, but as you see, boom, I gave you an example of demand. I gave you an example of liquidity here, and then I also gave you an example of structure. All right, the three levels that I told you guys that price is going to retest to, and every example that I showed you guys, those are the areas that it retests to. All right, you just have to be patient and allow the market to show you those things. All right, this strong bullish engulfing candlestick after this indecision candle was very key to show you that price wants to head higher. It takes time. Everything takes time. All right, so you just have to be very, very patient and trust your analysis, okay? So I gave you an example of that, guys. And here's what I'm going to tell you for the last example when it comes to a consolidation market. All right, I'm going to find it's a consolidation market, and I'm going to explain it to you because you don't necessarily want to trade in a consolidation range. Most definitely don't want to do that. You don't want to get caught in it. You don't want to do that. But you want to be able to catch it when it breaks out of that consolidation. Because when it breaks, it's going to run, whether it goes down or it goes up. I'm going to show you two examples of consolidation ranges. All right. So we did the example of an uptrend and how it works. All right. What I'm going to do now is I'm going to find a consolidation ranged market where the market is moving sideways. All right. So give me some time. Let me find it. All right. All right. Boom. Perfect. Right here. All right. So from here all the way to over here, what happens? Price is moving sideways. So if we put a box here, let's say we put a box right around here, right? I'm going to take this extended off and I'm going to really give this a different color. All right. I'm going to give it, let's just say, let's say green. All right. I'm going to give it a green color. But you see how the market is moving sideways, right? Right? The market is moving sideways, 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 sideways. No true direction of where it wants to go, right? But this is the key when looking at consolidation range markets. You want to look at what happens before. You want to look what happens before. Because let's just say, just to be fair to the market, 7 out of 10 times, whatever happens before, right? Whatever happens before the consolidation range is usually what's going to happen after, whether it's big or it's small. It's going to happen. All right. In this case, what happens? Right? In this case, what happens? Price is moving downward, right? Price broke structure to this low end, right? Boom. All right. Cool. We got it, right? Price is moving down. But then pricing starts to consolidate. But what happened before it started consolidating? It fell. So because price fell, all right, and price is continuously breaking structure to the downside in this zone, in this consolidation zone, it's not breaking higher highs. It's continuously breaking lower lows. It broke a lower low here, broke a lower low here, right? Came back, stayed within this zone. But again, guys, what do we have over here? All right, even within this zone, price is continuously showing you that it wants to what? Remember, I told you when price breaks structure, it broke structure here, broke structure somewhat here too, right? But what do we have? We have liquidity also here, right? This wick And this wick leaves a gap in price. So boom. Not only could you use this liquidity or fair value gap area in this zone, right? Because even then up here, there's even more liquidity. All right, it's more. It's still more over here. All right, it's still more right there. So these are your security blankets. If price, I'm telling you, if price breaks above either this one or this one, especially this one, this is your security blanket to know if it's going to respect it. If it breaks above this liquidity zone, then it's most definitely going to continue to go higher. Because, and then it also has one here. It's going to continue to go higher. But what we want to pay attention to in this consolidation zone is how is it respecting structure and how is it breaking structure in that zone? Because then initially it'll show you the direction it wants to go while it's breaking structure within the consolidation. All right, what do you have? Again, I told you this once. I'm telling you again. It broke a lower low here, right? Broke this lower high to the upside, right? But it respected what? It respected this liquidity zone. All right. It respected it, never broke above this liquidity zone. Boom, bow, bam. Right? It respected it. All right. So put that right there. All right, cool. Price never closed above this fair value gap, right? Price never closed above it. All right. Boom. Price gives you a strong candle to the downside. Oh man. It broke structure here. Broke structure here. Came back to retest. And what happens? Price breaks. Price breaks this low, higher low. Here. Price breaks also a higher low here. So this is the initial higher low that it broke. Price breaks, retest. Price breaks again. And at this point now, it does retest because if you look at it, guys, this is structure. All right. Let's just put the structures on there. Right. What happens? Price breaks structure, clean. It respects it not once, not twice. All right. It respects it twice and gives you a strong candle closing outside the zone. So what do? You can enter here, right, and go back to the past to see where you can aim to, right? This will be your aiming point, the higher low in the past, all right? So boom, when price breaks out of this consolidation zone where you want to head, it wants to head down here. So your entry point, if you want to wait till it breaks, is here. What do you want to do with your SL? You want to put it above that zone. All right, what happens? Price hits your target area. Price hits your target area. Enter after that engulfing. Price shoots down, hits a retest area in the market, and then comes back and knocks out that target point. So I showed you a consolidation range from when it's selling and how you want to attack it. All right. Boom. I showed you that one. So let me clear all of this out and show you a buying point in perspective. All right. Let me delete all of that. 1 second. All right. So let's find one. And when it's consolidating, it wants to break to the upside. All right. Perfect example right here, guys. Perfect example. Perfect example. All right. We notice that the market is doing what? Consolidating. It's moving sideways. Right? Moving sideways. What happens? What happens before the consolidation? It buys, right? Boom, 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 boom. Remember, I told you 7 out of 10 times because I'm manufacturing the market. it will go in a direction that it happens before the consolidation. So it bought before consolidation. 7 out of 10 times, it's going to buy after consolidation. All right. So boom, price buys, break structure here. So this is considered structure. Break structure here. It also breaks structure here while it's inside of that consolidation. So it broke once, twice. It broke two lower highs. It broke a lower high here. It broke a lower high here. So when it breaks 1 and 2 lower highs, that's definitely showing you that it's definitely wants to buy for the most part. All right. Boom. So consolidation comes, consolidation comes. What do you notice, guys? This is the higher low. It's respecting this structure level here. But also, right, price never had a chance to break back below what? This significant higher low. It tried once, it tried twice, it tried 3 times, but it couldn't go below that area. And because this is a higher low, what do we want to do? It's a structure point in the market. So now when I'm looking at this, right, what is it doing? It's respecting it. So wicking out multiple times, wicking out multiple times. But again, what do you also can take into effect? Whatever happens before, it's what's going to happen after, more times than not, right? If you do it once, you'll do it again, right? If you did it once, you do it again. So boom, price breaks, lower highs, like I said, consolidates, what happened? Boom, price takes off. But here's where you want to enter, guys. You could be aggressive and enter down here. You can. But if you initially want to take this into consideration, you can definitely enter after it gives you that strong break. Now, your SL would be, your SL will be below the structure point because this is structure also. All right. Remember, this is structure This is structure as well. All right. You see how I'm marking that off from the wick to the body, right? That's how you do structure. What happens? Price is respecting the structure point. Price never broke below that structure point. So what we can do is put our SL below there. And again, if you have nothing to aim for here, you go back to the past, right? And this is your aiming point. This high is your aiming point. What happens? Price takes it out. Still have a great risk reward ratio, whether it's 1-to-1, but it's not. Still a great risk reward ratio. What happens? Price hits your TP. You made your money. You can go about your day. All right, but guys, remember, I told you, those are things that I use. I simplify trading as much as I can. All right. If I can do it, trust me, guys. I know you guys can do it. All right. It takes a little bit of common sense. It takes a little bit of real life because you will see real life in this market. All right. And it takes patience. All right. Just see everything. Have an open eye to just look and see whatever price is doing. All right. Just take everything and put it in perspective. Watch this video over and over and over again until it becomes second nature, guys. This is the one video that you can use to attack the market the proper way. The proper way. All right. With that, guys. That's all I have for you today. Again, watch this video over and over and over again, and I guarantee you that it will get better. You will start to see the market the way you're supposed to see the market. All right. You can start adding very little twist to it. But this right here is a simplified way to trade the market. All right. You can add your twist to it. It's up to you. But this is how you simplify and look at the market for basically what it is. I showed you examples of a downtrend and how to attack the downtrend when selling and getting in the market when it's a downtrend. I showed you examples of an uptrend And I also showed you examples of consolidation, how you attack that. All right. I showed you the 3 levels whenever price is in a downtrend where it retests to. Remember, if it's in a downtrend, it's going to retest to what? Structure, supply, or liquidity. In an uptrend, it's going to retest to structure, demand, liquidity. When it's in consolidation, it's going to retest to structure. All right. Supply or liquidity, or demand and liquidity. Whichever way, those are the 3 things that you have to pay very close attention to as well. All right. And aiming for those highs or aiming for those lows. All right, guys. So that being said, guys, this is the end of the video. I appreciate you guys. I appreciate you. I appreciate you. Um, like this video, man. Share this video. Subscribe. However you want to put it, man. Just do this for this video because I guarantee you it'll help you. All right. Um, Remember, guys, I told you in the beginning of the video, nothing is fully guaranteed, right? Everything's not going to work perfectly, all right? But this will help you in your trading. I guarantee you this will help you. It will help you, all right? It will help you make money. It will help you see the market for what it is. It'll help you respect the market for what it is. Because even if it doesn't work how you expect it to work, right? Sometimes it's not going to go your way. It's just how it is. But for what I showed you today, guys, you will win more than you lose. But sometimes you will lose. Sometimes you will lose. All right. But again, guys, my name is Gary Scott, aka the Solid Pip Assassin, educator at G Figures Academy, and I'm out, man. You guys have a wonderful time, a wonderful day, a wonderful week, a wonderful year, and I'll see you on the next video.